again, the job market's super strong, which ironically means that it's not as good for our crypto bags. That is helping to underpin the economic expansion, uh, allowing the Federal Reserve to pause interest rate cuts while it assesses the impact of policies from Donald Trump's administration. Economists view Trump's push for mass deportations of undocumented immigrants, tariffs on imports, and tax cuts as inflationary. All of those things are accurate. However, uh, the kind of silver lining there, hopefully, is if we get this Department of Government Efficiency to cut $1 trillion off of spending, that would actually be quite good. That would possibly offset some of that, as well as over the next couple of years, if we start getting more and more companies implementing AI and getting more efficiency, that could really be good for GDP growth. So non-farm payrolls increased by 143,000 jobs in January, while the unemployment rate was at 4%, which is again historically low. So job market is looking quite good. Now, let's talk M2 money supply. And first, let me actually go over here. So this was from back in December. Now, this chart kind of, I didn't like this. I didn't like seeing this, but the M2 money supply globally, which means the overall amount of liquid cash, essentially, in the market, right? Because central banks create new money. That's what they do. If you overlay this with, I think it's like a 2 to 3 month, oh, there we go. Yeah, Bitcoin lags global M2 money supply by 10 weeks. And if you overlay this over a 10-week lag, you can see that these damn near line up almost perfectly. I mean, this is what kind of, I didn't like seeing this. In fact, this, ironically was the trigger here. You can see that the global two money supply actually peaked in September. I guess that would be what, like September, October, November. Okay, somewhere around like mid to late September. And then since then, it's been on the decline. Now this cuts off in December, right? This is a bit of an outdated chart because this was end of December. But anyway, this guy had said 5 days after my last chart, which was us hitting this peak, Bitcoin is down from $7,500 to 92.5. That was back from 100 grand. Following global M2 to a T, largely a story of strong US dollar trouncing everything else. Favorable Bitcoin native events like Trump's inauguration could help Bitcoin buck this trend. And sure enough, in the future, it did. In fact, we hit the peak on Trump's inauguration at $109,400. And since then, we've been down. So we're kind of following global M2 by about a 10-week lag. Now, if we look at the global M2, and I'm going to put this in the chart or in the chat if you guys would like to see this chart yourself. Let me find my chat here. There we go. There we go. You can check this out. The only problem with this chart is that I can't really zoom in closer. And it doesn't overlay this by like a 10-week lag. But if you look at the M2 money supply, sure enough, M2 peaked September 22nd. So about 10 weeks later, that'd be what, 2.5 months later? And so if we look at that, that shows Bitcoin was doing quite well. I mean, it still ran quite a bit, but you can see that it dropped from an area that we've been flat since January, essentially. January all the way through June, then it expanded, then it dropped, and now we've got this bounce back up January 5th. So we got a big increase in global money supply. When central banks create money, it takes a while for that to filter all the way down into the pockets of people who can then buy crypto. So if we see from January 12th, and we follow the fact that that should be bottom by about 10 weeks, then, end of Q1, we should start getting a big rise in the crypto market as this money that was created here starts filtering its way back into the overall pockets of everyone. But I thought that was pretty fascinating. This thing has followed to a T over 10 weeks. So maybe next time we need to pay attention to this because this predated the peak of altcoins in December. I mean, this would have, Bitcoin has actually held pretty steady. As a matter of fact, it's kind of bucked to this trend, but altcoins follow this to a T. So maybe this is something that for Brett and I, we need to start tracking is global M2 money supply in terms of how it affects the overall altcoin market, because that's a really important one. So, I've learned this now. And so moving forward, this could have told us to put a little bit more out of this into cash as we were going to get a big altcoin correction over the last, month and a half, which is exactly what happened. So lesson learned there, but that's really good. I'll keep an eye on this chart moving forward. Now let's talk about, I'm going to skip this for now. Let's talk the last couple days. What happened? So Bitcoin retail and ETF had big outflows over the last day or two to the tune of about $500 million. However, analysts eye the market bottom. The Bitcoin wallets have hit a 5-month low as retail investors sell while whales accumulate. Billions in institutional outflows continue amid global economic uncertainty. We're going through a bunch of shakeup here with Trump in office. There's a lot of good things happening in terms of long-term, long-tail effects for our crypto bags. For example, the Trump administration with David Sachs being the crypto AI czar, implementing really good policy, stablecoin policy, which we'll talk about shortly. But in the short term, we've also got Trump like a bull in a china shop, just bashing shit around by threatening tariffs and all kinds of crazy stuff. So we're kind of stuck in the middle, just waiting to see how it plays out. So retail investors are increasingly liquidating their Bitcoin holdings amid growing institutional outflows and geopolitical tensions. Number of Bitcoin addresses with a non-zero balance sunk below 52.45 million, which marks an over 5-month low last seen in September 2024. And if you remember, September 2024, that actually was around the bottom, right before we started rip roaring higher. So that's worth noting. Now, in comparison, the Bitcoin network boasted over 52.56 million such wallets on January 20th when Bitcoin reached an all-time high. However, most of the selling pressure stemmed from US spot Bitcoin ETFs. ETFs recorded over 251 million of cumulative net outflows on February 12th, marking the third consecutive day of net negative outflows. So the last 5 days, we've had outflows from ETFs, amounting to a total of about $500 million. Now, while retail, which is always considered the dumb money, whales have been the smart money. Whales historically buy the blood and sell the greed. So whales have accumulated nearly $3.8 billion amid this dip. Let's see here. So large institutional, or excuse me, large Bitcoin holders accumulated nearly 40,000 Bitcoin, more than 3.79 billion in cumulative net flows within a day on February 5th, when Bitcoin traded below 97.6. So they've been buying this dip. The strong accumulation suggests the Bitcoin bottom may be near. Quote, similar to a pattern observed in September, the local price low, it suggests that these large players might be seeing value at current prices. This could indicate that the market is nearing a bottom and the capitulation phase may be ending. Now, it's worth noting, now altcoins certainly have seen a capitulation, down anywhere from 50 to 70% since their peaks. Likewise, when it turns around, they're going to be the first ones to go rip roaring out of the gate. However, it is fascinating to see that, quote unquote capitulation on Bitcoin is at 95 to like $92,000, right? It's just amazing considering that we didn't even hit those prices until November. It's remarkable. So if we look at this, what is that? 92,000, let's call it. What's the low? Okay, recently the low we hit, let's call it 90,000. And let's say the high was 109. That is a 18% pullback. And so far this cycle, we haven't really seen those monster pullbacks that we're used to in Bitcoin, with the exception being this past summer. I think we went 30% or so. But the average pullback this cycle, as opposed to last, instead of being 30, 33, 35%, this time it's been around like 15, 16. So it's been amazing to see just how much the ETFs have dampened the volatility to the downside.
Hey, this is Brett from Moonstream. If you'd like to learn more about our pro trading signals or our live classes every Wednesday or our Retire Rich program, go over to moonstream.io/start.